here. We're live here. We're live here. We're live everywhere. Good afternoon, everyone. This is Roman Shersher, your number one online resource for buying property here in Southern California, sunny Southern California, and also working with Florida, where it's ugly right now in the real estate market. Ground zero in terms of inventory, sales, and not quite price declines, but it's getting there, especially in the South and in the West. Luckily, I'm in Jacksonville. We're kind of insulated from that, and we don't have as big of a challenge out there. In fact, I just listed a property for sale and had 3 offers in the first weekend, and we're in escrow right now. So knock on wood, good things going on there. But before I get into this week, I wanted to ask you guys to please, if you like this video and follow along and watch at least part of it, please hit the share button, share it with your friends and family, follow, like, subscribe, do all that good stuff. And make sure you head to Facebook or YouTube after to check out the links and the slides to the content I'm going over today. Remember, I give you raw data. I let you know when I'm giving you my opinion, but it's raw data that drives it always. All right, at this point, I've mentioned this before, I bought hundreds of homes between Florida and California. I wrote a book packed with insider tips on how to save you $10,000 to hundreds of thousands of dollars. And most importantly, especially in a demand market, how to get your offer accepted. I've dealt with so many buyers where they've gotten their offer rejected 15 times, where they're going up against 10, 20, 30 potential offers on homes. This happens more often than you expect, especially the homes that you want. There's a reason you want them, and you're not the only one usually. So if you want to read the book, I'd be glad to give it to you for free of charge, no obligation. Just DM me for your free copy. All right, current projects, like I mentioned, I just listed a property in Jacksonville. It's already in escrow. 4-bedroom, 2-bath, 1,300 square feet, cute little home, great rental. Listed it for $219, and also, by the way, we're at escrow at $225. So good situation there. I have two condos that we're selling here in California. One's in Tarzana and one is in Beverly Hills. We got a couple of offers in on Beverly Hills. Tarzana, not yet. We just came to market, so good opportunity. Beautiful 2-bedroom townhouse. And get in quick if you're looking for a good unit in Tarzana. All right, let's go into our content for today. Let's go here, share our screen, and we're up. All right, data came in on the June home sales. And wouldn't you know it, LA saw a sales increase, a modest increase, 1.1% sales increase versus June. Versus June of last year, 2024. Different than the rest of the state. The state has a lot of softness right now in comparison to last year. Though our transactions actually fell 5.4% from May. A lot of people sitting on the sidelines. Rates are still high, hovering around 6.8, and buyers just waiting. Even though it really is not in your best interest as a buyer to wait. It's a great market to pick up good properties right now at good discounted prices, below list, with credits, with everything. We're getting properties at $100,000 below appraised value. We're getting $25,000, $50,000 credits regularly. Of course, you have to know how to negotiate to get these, but if you're working with the right agents, right brokers, then right now is a great opportunities. My hands are often tied when I'm going up against 15 other offers to get you a price discount, okay? It's hard. It's definitely harder. Today, when I'm up against 3, not only am I going to get you the property with a much higher percentage rate, but also I'm going to get you our inspection process, the process with which we go about learning about the property, and our request system really maximizes what you're able to get back in terms of credits, price declines, price cuts, whatever it is, based on the property. So I got a lot more leeway today Does not make sense to wait until these rates come down from 6.8 to 6 to then jump in the market with the other 500,000 people that are waiting to jump in the market as well. So, and another reason why it doesn't make sense is, yeah, you'll save on the rate, but guess what? Prices are still going up. Prices reached new highs. Median LA County sales price hit $903,650 in June, up from $835 in May and $889 last year. So now, of course, this is based on median, right? So if you sell a little bit more of the higher price or the lower price, but the point is, where are these huge price drops people predicted? The LA market is going to fall by 50%, I heard from one person. No, it has not happened. We're not seeing price decreases here. Other parts of the country, absolutely. Other parts of the state, absolutely. LA County has not seen price decreases. Maybe next month it'll go down a percentage point, then it'll go up. Last month it went from the median hit went from 835 to 903. Has the prices really gone up that much? No, like I said, there's a weighted average. But the point is, they're not going down. They're not going down. And last week I reported that 13% of the people that are listing their homes are delisting because if they can't get the price, they're just taking it off. So there's not as many motivated sellers. When prices really drop significantly, there's one thing that's always in common with every really bad market span, okay, like 2008, 91. One thing really shined. It was the quantity of foreclosures. We're sitting at very little foreclosures. We've maybe increased from like 0.5 to 0.8%, and people will say, oh, our foreclosures are up 60%. Yeah, because you went from 0.5 to 0.08, but 0.8%. There's no foreclosures out there. And there's 1 million people going after those foreclosures. So you're not going to get a great deal on the foreclosures, but most importantly, there's not a glutton of these foreclosures depressing prices. Those are motivated sellers. These are distressed sales. There's no distressed sales. Everybody's got equity. A ton of equity that they've built up. Why? Because these loans have been good. Because you had to fully qualify for the loan since 2008, 2009. You didn't have to do that in 2005, 2006. They used to have a saying, if you could fog a mirror, you can get a loan. You can't do that today. And you haven't been able to do that for the last 10 years. So having said that, prices are not decreasing. Doesn't make sense to sit and wait for the rates to drop. What is true is that inventory is going up. So LA County inventory jumped to 17,285 active listings, up 4.8% from May. People, waited, and now it's the summer season. They put their properties on the market. The ones that want to sell, again, they will sell if they can get their price. And pending sales were steady at around 2674. So days on market went up to 34 days. This used to be very low. This used to be 15, 13 days on market. And it gives more buyers breathing room. Closed sales volume was at about 11.1 billion. There's still interest. There's a lot of interest on the high end, and there's a lot of interest for turnkey properties that the buyers don't have to do anything with because they're putting such huge down payments on. They rarely have a lot of money to then go in and actually renovate the home. So you're not seeing a lot of that. So as you can see, these numbers, I'll have links to all of this as to where we are. But LA Metro went up. Price month to month in LA Metro, that's not the city of Los Angeles, went down a little bit. Price year over year still up 1.6%. See, 1.6%. This is taking a yearly average now. So yeah, we're not going up 8-10% like we were a couple of years ago, but we're still up 1.6% year over year in LA City. LA County is where we mentioned month over month, we're up 8.2%. Year over year, still 1.6% increase in LA County. Okay. And then we saw sales drop a little bit. All right. All right. Let's move on now to the other great news of the last couple of weeks. So under the new bill that was passed, it increased and gave us major tax breaks in the state of California. Okay. So state of California, if you remember, in the previously, before this bill, you were able to only deduct $10,000 worth of your property tax. Now, in California, property taxes, if you're buying anything today, if any home that I know of, you're going to probably have property taxes that are higher than that 10,000 limit. And you are capped, which means that if your property taxes are 15, 20, you're paying 1.125% property taxes annually. So if you have $1 million property, you're paying $11,250. $1,125 of that you were not able to deduct previously. Based on the new law, you can now write off and deduct up to $40,000 in state and local taxes. In SALT, they call them, S-A-L-T, state and local taxes, on your federal returns. This will cover all homes up to 3.5 million, approximately. So this is fantastic. Now you're able to really write off and get full tax relief. Before this, only the people outside the coastal states that had the $1 million homes were able to take advantage fully of their property taxes that they were paying. That's not the case now. And so in expensive areas like LA, San Francisco, San Jose, where property taxes are typically over $10,000 a year, families are now going to see thousands in federal tax savings. This new cap drops the number of owners unable to fully deduct their property taxes from 20%. So 20% of the people in the state of California could not fully deduct their property taxes. Now it drops it to 2%. So almost everyone is going to be able to fully deduct it. And that 2% really are super high-end luxury properties that are over, let's say, $4 million. Okay, and purchased for over $4 million. It's a big win. People were lobbying for this for a long time. It was unfair to the people in the state of California, New York, some properties in Florida that it's routinely have median home prices, edging right at around $1 million or more. All right, let's talk about. So this is the article here on the SALT deduction rules. You can go ahead and Google anything about California SALT, and you'll find more information about this. Let's go over to the mortgage demand. So this week, mortgage demand flatlined, and the reason is that rates have still stayed fairly high. So it increased to 6.84% this week from 6.82%, and refinance applications fell 3% for the week. So right now, mortgages and mortgage demand has been slow. This is also due to the fact that a lot of buyers are just sitting on the sidelines. They're very rate sensitive. They're waiting for clarity on what's going to happen with the Fed, what's going to happen with the tariffs, what's going to happen in the world. I'm telling you right now, yes, of course, this will all affect us, but the need for a property still remains. And what will end up happening is that you're going to jump in when another million people are going to jump in, and you're going to have increased competition. It's going to be closer to what we experienced in the summer of up to April in 24 and the summer of 23, where properties were selling listed for 1.2 million and they were selling for 1.35, listed for 1.6 and they were selling for 1.9. This was common just a couple of years ago. And what do you think is going to happen when these rates fall? It's going to happen again. So where are we with rates today? Our 30-year fixed stayed the same in this last week at 6.81%. Our 15-year fixed went from 6.04% last week to 6.05. The 30-year jumbo went from 6.92 to 6.9. Our 30-year FHA is now 6.39, and we were at 6.39 as well last week. And the VA went from 6.4 and stayed at 6.4. So we're right at exactly where we were last week. Not much movement in the mortgage rates. Okay. All right. So what does this mean? Well, number one, in terms of inventory gains, we have implications of this is that the inventory has gone up. Okay. Sellers and may continue to go up because the sellers now get this new tax relief. They may be more ready to go ahead and buy another property where they will increase their property taxes, but it'll be fully deductible. That wasn't the case. In California, if someone wants to upgrade from a $1 million property to a 1.5, let's say go from 3-bedroom to 4-bedroom, or change into a better area or something like that, their property tax implications were going to be huge. And so this reduces that significantly by being able to fully write it off. Next, I think that there is going to be based on these rates being where they are, there's a prolonged negotiation period. Okay, we have right now a great opportunity. Within the last 3 years, I have not seen as good of an opportunity to buy property. Okay, we have higher inventory, we have 2 to 3 times the amount of inventory that was available the last couple of years, and we have a low, reduced number of buyers because these buyers are waiting for these rates to come down and waiting to see what happens with the tariffs, waiting to see what happens in the market, what happens with a number of different things. Consumers' confidence in this last week edged upwards, so that's a good sign. And the summer season's upon us, so we're seeing some more buyers than we're going to see. I think right now is an incredible opportunity time to get into the market and buy properties at a discounted price. And I'm getting great deals. I'm getting great deals out there. And lastly, with mortgage rates that are going to edge lower in the future, everyone's predicting that in September we have over a 50% chance of a first rate reduction. We could see a increased level of sales come that period. And so right now is that great window that I'm talking about. All right, let's go to our quote of the day. It is by Mark Twain. He says, "Buy land, they're not making it anymore." Great quote. Underscores the timeless appeal and long-term wealth building potential of real estate. No matter how markets, rates, or tax laws change, the supply of real estate is fixed. The supply of prime land is fixed. If you know good pieces of land, whether it's got a property on it or not, buy it. It will go up over time. It's shown to do that forever. All right, guys, thank you very much for joining me on this week's edition. We'll be off the next couple of weeks. I want to thank you for tuning in. Remember, if you like this video, help spread the word on social media. Helps us so much. Just tap the share button, share with your friends and family. This is Roman Shersher, your #1 online resource for buying property with this week's edition of Buy, Invest, Sell, a broker's formula for real estate success. Have a great week.